Hey, what's up, everybody? Friday. I woke up at 4:30 in the morning, as I always do, but today I ran 6 miles. I usually go to the gym, but today is my day when I run, so I ran 6 miles. Feeling good, feeling excited. Anyway, no vote yesterday. They postponed the vote. The vote on the new health care bill is happening today. The House vote will happen today, I believe, around 5 o'clock. I do not know if they have enough votes. Trump basically gave the Republicans an ultimatum saying either you vote for this thing or Obamacare stays and you own it. I don't want to get too much into the politics. I talk about economics here. I talk about trading. I talk about markets. I talk about mental game. So I'm not going to get too much into the politics. We'll see what's going to happen. Again, I think if the House passes this bill, even though it's probably going to be dead in the Senate, if they pass the bill, probably get some positive reaction. Although the markets will be closed at the time, but we'll see it Sunday night. We'll see it Monday. And again, if they don't pass it, we saw yesterday a modest little sell-off. There has not been much of a recovery from that big sell-off we had the other day. Market trying to recover a little bit, but it seems under pressure. Hey, I want to talk about something else, and it is something that I mentioned in the past, but I'll point this out right now. New data from the weekly H.4.1, that's the Fed's weekly, I call it the balance sheet. That's their whole financial statement that comes out every Thursday. The data in there shows that Treasury holdings, Treasury securities held by the Fed now at an all-time record high, Now, you may recall I did a video a ways back talking about these idiots on Wall Street, these pundits who predicted right around the time of the first rate hike, December 2015, there was all this hysteria. These guys were paraded across every business network like this ridiculous CNBC, and these guys saying that there's going to be an avalanche of Treasury selling, an avalanche of Treasury sales because the Fed was raising interest rates. And I pointed out at the time that these idiots don't understand that the Fed, by virtue of the fact that it pays interest on reserves, that eliminates the need for reserve maintenance as it was done in the past. In the past, the Fed would have needed to drain out reserves, sold treasuries or some of its other holdings. By the way, its holdings of mortgage-backed securities also at a record high. So what do these guys do? They basically engage in malpractice. I mean, they're out there getting paid big money at Wall Street firms or hedge funds. They get paraded across these idiot channels like CNBC, which is ridiculous. And they engage in malpractice. They don't know what they're talking about. They spout this nonsense. Everybody think, oh, these are smart people. They're idiots. They're jerks, okay? We've had 3 interest rate increases, by the way, and the Fed now is sitting on record holdings, 2.464 trillion of Treasury securities. So I just thought you might be interested in knowing that. In any other industry, if you think about it, malpractice to this degree, they'd be sued or they'd be run out of business. I mean, Wall Street routinely engages in this sort of malpractice. Stupidity. They don't know what they're doing. Everything is guesswork. I mean, even coming from Goldman Sachs, if you ever read or listen to a Goldman Sachs analytical report, it's all guesswork. It's like, well, we think this is going to happen because they don't even understand the real true impact of policy. I don't think there's anybody over there who really understands the monetary system from an MMT perspective. I don't say that. I don't say I think. I say this is what's going to happen. And then it happens. It might not happen at the very moment that I say it, but I say this is what's going to happen. For me, it's science, and it is. It's like physics. There's a force, and then there's a reaction. And I tell you what it is. Very simple. So that's basically it. We saw, durable good orders today. come out lower than expectation. It was up 0.4, but they were looking for 0.5. Again, economy not showing a lot of strength here in the first quarter. You know, a lot of people are starting to pick up on the credit slowdown. Of course, that's something I've been telling you about for months now, for months. And those of you who get MMT Trader Report, you know, I've been going deep into the analysis there every single week. But if people are catching on to this, people are catching on. I wouldn't be surprised to see the whole thing start to improve now. I mean, that's just my contrarian nature. When I start to see everybody pick up on the same information, the first thing I'm doing is looking for clues that that thing might start to reverse. But hey, you know, we'll see. Like I always say, I see it before everybody else. And those of you who have my report, you get the information before everybody else, way before everybody else. Remember when they were buying the dollar? Oh, the Fed's going to raise interest rates. And there's still people out there, the same people, they'll never change. All the way down, they'll say the dollar's going to turn around because the Fed, we could have 35 rate hikes and they're still going to say the dollar's going to turn around even though it'll collapse. It's just comical, folks. It is comical. What else can I tell you? Anyway, that's it for now. Maybe see you later. I'll be working on the MMT Trader Report all this weekend. Again, if you want to sign up, get the 30-day free trial. Go to my website, pitbulleconomics.com, and click on the, right there on the homepage, it says get the 30-day free trial. All right, everybody. See you later. Bye-bye.